Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Thursday, the 15th of December, 2022, and we're at 4:10 p.m. Central Time. I'm early. I've got a Christmas dinner I have to go to. I have friends that flew in from out of town, so I want to make sure I get this out for you. Today was a monster day to the downside. You can see what went on. The dollar up, metals get slammed, rightly so. Mixed day in the grains, but a big rally day in bonds and notes. Energy parts here down, but natural gas back up as we didn't put as much. And what people are thinking is with the cold weather now, we don't have that much that's going in to the storage. Now, why did the market all of a sudden come apart? Let's talk about yesterday. I showed you all the reports coming out, and I warned my traders. I said, I don't think we take on any positions. There's so much news coming out tomorrow, including the Swiss National Bank, the European Central Bank, the Bank of England, and the Norge Bank, all giving us at one time their rate decisions. It's going to overwhelm the market, possibly. It's certainly going to overwhelm a simple guy like me. And the market got overwhelmed. And what the market is saying is everybody is saying we're in for a worldwide recession. That is the problem that you're getting. Bank after bank after bank. What are the banks also saying? They have to stop demand. So they're going to take rates up where it has to go. Who is the most hawkish between Powell and all the other bankers today? To my surprise, Christine Lagarde. Oh my God. I've been a fan of this woman since she's been on the scene. I've never seen her this hawkish. And apparently they were debating very seriously going 75 basis points. Remember, this is a bank that you could barely drag along to do a rate hike. And now they were taming it back to 50. And she said, you're getting another 50 coming next report. I mean, if you saw the interview, it was very clear. The market understands that the bankers are very serious. Tomorrow, we get 3 of our Fed members going on for the first time after all this, and they're going to talk. You want to be in tune with that. They'll be talking throughout the day. For those of you that get my full research, the times will be there. All right, so the dollar up, and you're going to get a knee-jerk reaction from everything, and it's exactly what happened. So when we get to the gold market, you've come back, and all of a sudden, we've gone now. We were up for the week. Now we're down for the week 1.16%. The market's still basically sideways. Let's take a look at where the market is stalled, and it's right here. Why? Let's go back a day. Prior to today, you had a pattern of higher lows, higher highs. Bullish, any way you want to cover it. Then the market comes in and breaks down today through that low. In order to get to there, to get to what I call the line in the sand, you have to get through that number to get to the 18-day average, and then you're neutral. That's exactly what I think happened. What stopped the rally? The 200-day average. You can see it. It's crystal clear. And the Bollinger Band together. This is why that's so important. And you keep hearing me say in my enhanced Bollinger Band course, I'm going to add for free one more chapter. I'm putting it together as we're talking. I'm sure I'll have it done in the next week. And I'm going to give it to everybody that has bought a Bollinger Band course. We have a record, we think, of all those people, and we're going to get that out to them at no cost. Because as I add a thing or two, that's it. When I redo a whole course, no, you got to buy the whole course. But if I think there's something important, that's just what I do. It's one of the services we offer, and it's why I think we're growing. So as I look at the market and I add to it momentum, turn down. Momentum down, neutral right here. Could you slip back down? You could. Do I think you will? No. I think you're going to get caught in here for a little bit is what I really expect. When I look at the gold-silver ratio, this just tells you silver's in a correction now against the gold. It was strong as can be against it. It's now beginning the correction. Could it gallop all the way up to wherever the 18-day average is? Yes. But that average will keep falling quicker than the market will rally. And what did you do here? The same identical thing. If we take a look and step back away from today, you had the pattern of higher lows, higher highs, running against the upper Bollinger Band, not embedded. And with today's action, the market breaks through and maybe you'll go back to the 18-day average. In theory, the way that I teach it, because gold got down to the 18-day average first, it's the weaker of the two. But this has gained so much on the gold that in dollar terms, it's going to lose a bit. Copper did just what the others did. You broke the pattern and you came back down. And again, the 200-day average, the first challenge of it, stopped the rally. In the platinum, what about that call saying you get up to the Bollinger Band yesterday, you got to come out of that market. Boom, right back down and kabang. I feel like Emerald. Remember we do that on the Crazy Food? When I used to live in Miami, he had a place, Emerald's. Maybe it was 6 blocks from where I lived. I used to go in there and sit at the counter, sometimes by myself, and watch him do all that. It was so much fun. All right. Higher high, lower low. Miami Beach, folks. If you've never been there, you want to go. It is fun. It's like nothing else. Up and down, sideways, crazy action, but you're not trending. So in the metals, we're in a correction time. All right. Don't try to make a trend out of it. It's not there for you to do. You had an uptrend, you made some upside targets, you got there. The dollar might want to give you a correction now to the 18-day average, but what you want to watch, is there any chance of it embedding? And at this point, you don't have the numbers under 20. You're just an oversold market that's looking for a correction. So you don't try to make something out of nothing. You don't try to make stew filet mignon. Got it? You don't do that. You will regret it. And I talk about this in the mornings. You know, at 5:30 in the morning, I'm recording a video for you. Now, 5:30 Chicago time. You got to take whatever your central time is to that. But I've already got the videos going, and I'm telling you, I'm covering 40 charts, giving you buy-sell ideas, what the fundamentals are, what's come out in Asia, Europe so far that we should be paying attention to. Then we start looking at a combination of daily and weekly charts on all these different categories. Come on, if you've not tried this, $7.95, you're going to get 30 days worth of the videos, 24 videos, each about 18 minutes long. Works pretty cool. It'll play on the phone. We give you a free app with it as well. It'll play on the website. I love when you look at it on the website. I like to use the phone for you to get the text message and or the email. Hey, it's out. You know that it's ready for you to view. But on the website, you get more features because you can do more on a computer than you can on the other. And you can glide along the bottom and go to the sections you want and then light up and tell you where you're at. How do you get it? Go to our website under the word research. It's there. Can't make it any easier for you. You can also just move your cursor up here and that'll take care of it. Just give a click on that icon. It'll take you right into the area you have to be. I'm Ira Epstein. Thanks for listening. I'll see you tomorrow.